It ain't sexy. But if you don't know what you're doing, it could cost you $16,000 or more. Y'all, let's talk about the part of moving abroad that does not look cool on Instagram, not the beach, not the passport stamps, not the cute little cafes where you're sitting and pretend on your laptop, pretending like you're living your best soft life. We're talking about the IRS, because some of y'all think that if you leave the United States, the IRS just waves goodbye and says, safe travels, beloved. No, that's not how it works, y'all. That is not how any of this works. So if you are a U.S. citizen, if you are a green card holder, if you have money, bank accounts, rental property, investments, a business, a social security pension, or even a little foreign bank account you open so you could pay for a light bill abroad or something, you need to understand what your tax responsibilities are, because the move abroad is supposed to give you more peace, y'all. Not a letter from the IRS that makes your blood pressure spike, right? Right, Rick?
And listen, you know us. We are not here to scare you. We are here to prepare you, because a lot of people are talking about moving abroad. A lot of people are talking about getting residency. A lot of people are talking about second passports, foreign bank accounts, and building a life outside of America. But far too people are talking about what happens when tax season comes around. When is tax season? April 15th?
April 15th for Americans, but for people
For
abroad,
Americans. Yeah. So
Kind
today
sort of.
we brought in an expert, the expert.
That's right. Right. That's right.
Today we're going to talk about what American expats need to know about their IRS tax responsibilities. We're going to ask the questions like, do American expats still have to file U.S. tax returns? And what if you live abroad full time? What if you you don't owe any taxes? What is the foreign earned tax income exclusion? And what is the foreign tax credit, etc.? And get your questions ready and put them in the chat.
Yeah, right. And y'all know the deal. Okay, let's put the right banner up. We're going to put a Q in front of your question. Let's show that. But y'all can like and subscribe at the same time, right? Hey, y'all. My name's Halisi.
And I'm Rick. Welcome to our Black Utopia.
On our channel, we talk about money, travel, and life abroad, right? We help folks who look like us, especially of those getting close to retirement age, who may have forgotten to plan. We help you get your money straight so that you can retire on time or maybe even early.
Earning abroad ain't bad either.
That's right. That's right. So now, if you're new to our story, then you may not know back in 2018, Rick and I got a wake-up call, y'all. We were getting close to retirement age. We looked at our money and it looked cray-cray.
Crazy.
But we got our financial act together and we went from negative 22,000 to over 1.1 million in net worth. Y'all. So when we talk about money, right? When we talk about planning, when we talk about moving abroad with strategy, we're not talking about theory. Y'all, we ain't new to this. We true to this. One of the things we have learned is this. You cannot build a peaceful life abroad if you are ignoring the paperwork back home. So if you like what you're hearing, we need you to subscribe. All right, subscribe. We are on our journey to 100,000 subscribers, y'all. We are inching along after 4 years on YouTube. We thank each and every one of you. Hit that notification bell twice so that you know every single time we go live, and you can join our community live. Smash that like button.
Smash it.
So you can tell that YouTube algorithm what the heck is going on, because it's lost its mind lately, y'all. It's lost its mind. So before we get started, I want to give a shout out to the Utopians and the Utopian Legend community members of our channel. That's right. Who hung out with us backstage, well, behind the scenes, right? Your support means the world to us. Seriously, seriously. We could not do this without you, and your support allows us to concentrate on finding great guests like the one that we have today. Right, Rick?
Yep. So, let's start by putting this in the chat. When it comes to expat taxes, try to say that 5 times and hold your tongue. What confuses you the most? Type one of these in the chat. A, do I still have to file? B, foreign bank accounts? C, Social Security or retirement income? D, business or side hustle incomes? E, I don't even know what I don't know. And if you are watching from the future, hey, future
Hey.
utopians, drop your letter in the comments. And don't be embarrassed if you answered E, because tax confusion is one of the most normal parts of this whole expat journey. That's why we brought in Katrina. But before we bring on Katrina,
all right. Yes, I wanted to say hello to the people who are in the chat, but you know what? Wait, what's going on here? Oh, wait. I'm not seeing. Oh, there we go. Now I'm seeing everything. Before I get to that, I'm going to say hello after to the people who are in the chat and to our members after I bring Katrina on. All right. Today's special guest is Katrina C.M. Haynes. Katrina is the founder of Haynes Global Tax Experts and a CPA. With more than 20 years of experience providing tax consulting and compliance services to U.S. citizens, U.S. green card holders, and foreign nationals. She has also been a speaker on OBU and OBU sponsored events in the past. That's right. Hello, Katrina. How are you?
Hey, Katrina. Did we miss anything?
No. Thank you for that wonderful introduction. It's great to be back with you guys again today.
Yes, definitely. What would you like to add to that introduction?
I'm just listening to you guys talk about how important tax is really important to me because it's unfortunate that so many people go overseas looking for a better start or a different start, and they don't take into consideration the tax implications of their move, and then it can be disastrous if you do that.
Yeah. It really can. It really can. And so let's say hello really fast because this is going to be a very interactive. There's no teaching points or anything like that. Rick and I have some questions that we are going to ask, and then we will get to questions from the audience. But really quickly, I want to say hello to the OBU family, to our utopians, because y'all know first in was Allison. Hey. And we've got a new member, Thomas Winters. Welcome to the OBU family. Crystal is in the house. Bobby is in the house. Greta. Hey, Greta.
Hey,
Did
Greta.
you check? Greta, check your WhatsApp. I WhatsApped you, baby. And Greta is one of my spiritual partners. I believe that. Hey, John is in the house. Mr. John Malone. We got Bobby Harbert is in the house. DKM is in the house. See, half these folks, we just saw y'all a couple of minutes behind the scenes, and now they end the Zoom and then they come over here to say hello to us. I want everybody to give a shout out to Greta, who's Embria 0904, who's one of our wonderful volunteers and keeps us straight. Dr. Sanji is in the house. Dr. James Greer, hello, Shanora.
James Greer.
Everyone, when you come in, you've got to say hello. Say hello in the chat. If you're watching from the future, hello. Say hello from the future. And let's get started. Katrina, let's start with the question everybody wants to ask, but some people
everybody
are afraid to ask. Okay, yeah. If I'm a U.S. citizen living abroad, do I still have to file a U.S. tax return?
Yes, yes, you do. You file as long as you are a U.S. citizen, as long as you are alive. Period, full stop. Even if you have no income to report, you should be filing. The only exception to that, and this happens rarely, this actually just happened to my grandmother a couple years ago, the IRS at some point may send you a letter and say, please stop filing. If your income is historically below the filing threshold and you're filing anyway, unless you get a letter from them telling you that you don't have to file anymore, then you have to file. Period.
Okay. Yeah. I'm surprised they haven't sent my mom a letter like that.
Yeah.
But yeah, right?
Yeah.
So what about green card holders who are living outside of the United States?
Same. So here's the thing about green card holders that gets them in a lot of trouble. Green cards, if you've seen one, it has an expiration date on it. And what a lot of green card holders, they misunderstand is the fact that the expiration date is equivalent to the expiration date on a passport. Meaning that if it expires, that does not, it expires for immigration purposes, meaning you can't use it to travel to and from the United States. It doesn't change your tax implications, okay?
It doesn't change your tax status.
Yes, correct. So
the United States is diabolical.
Yes, it is. So if you have a green card and you move outside of the United States, you technically have to be in the US. I can't remember how long for that green card to remain active. So it can be deactivated for immigration purposes, meaning you cannot use it anymore. You can't come back to the US, but that does not change the fact that your tax liability remains until you have surrendered that green card to a US consular officer and it has been accepted. I have had more than one family of decedents who are green card holders that said, oh, well, it expired in the 80s. And then they're wondering why they can't get the decedent's assets out of the United States. Well, there's unfiled tax returns, there's unfiled reporting, and the IRS is not going to release those assets until that estate is settled.
That is, I mean, I wouldn't even want to get caught up in that quagmire.
Yeah,
right?
It's nasty.
So go ahead, sweetheart.
I was going to say, somebody says, well, I don't live in America anymore, so why does America still care?
Unfortunately, that's just the way the legislation is that as long as you are a citizen or a legal permanent resident, aka a green card holder of the United States, you get all the benefits and privileges, and one of them is paying tax to the United States. And I think where most people misunderstand is they think, well, how are they going to know? And I get that question a lot from people in consultations. Well, how is the IRS even going to know? Well, two things. First and foremost, we tell on ourselves all the time. Social media, we are telling on ourselves constantly. I'm checking in. I'm on the plane. I'm moving overseas, hashtag digital nomad. You know what I mean?
Hashtag
everything.
I'm out, bitches.
Exactly. And, the IRS has a whole separate sub-department, and that's what they're doing. They're looking for people who are out here, especially those people that are proclaiming to make millions of dollars. Okay, well, let's see. Your name is such and such. I mean, it's not that hard to figure out what your real name is, especially since, again, we tell on ourselves.
Right.
And then let's cross-reference your tax return. That's funny. You made $10 million or so, you say, and your tax return shows $10,000. Well, guess who's getting audited now? I've seen situations where people have gone overseas, and I can't remember the girl's name, and I wouldn't say it here anyway, but she was on YouTube talking about how you can live in this country. You don't have to pay taxes there. You don't have to pay taxes in the US. And she started this whole YouTube channel, and the country she was living in was like, that's not true. You're supposed to be paying taxes here. You don't have the work visa. You're not even supposed to be living here because you came on a tourist visa. You definitely can't work. So you need to go. And then she has tax issues in the US because they're like, okay, now you just told everybody you weren't paying taxes in the United States. So that's the first thing.
What the heck was she thinking?
I don't know.
Do not let me catch any utopian out there talking that nonsense. Okay, yeah. Was she black?
Yes.
Ooh, yes. A black woman.
Yes. God, it was shameful. The second thing is there's something called the FATCA regulations, FATCA. And what the FATCA regulations are, they're actually withholding regulations, but they impact us as individual taxpayers because what they do is for any foreign financial institution or non-foreign financial entity, they require a 30% withholding of any payment to a U.S. person. And if that payment is not made, then the entity itself is fined, which means that basically these foreign entities, financial, so think banks, think anyone that's paying a U.S. person has to withhold at 30%, and then also has to disclose that income and send that withholding back to the IRS, or they are penalized. Meaning that just like when you get an IRS form, so think like a W-2 or a 1099, those are IRS forms, meaning the IRS has a copy of them. That's how they know you haven't filed something. So these equivalent forms are now coming from foreign jurisdictions and reporting your foreign bank account interest, your foreign dividends, the capital and gains on your foreign investment accounts. They're sending that information back to the US, meaning they can see it now where they couldn't before. And it makes it a lot easier for them to audit you and to hit you with these nasty penalties that Rick and Halisi mentioned earlier.
Oh my God.
That's right. That's right. And, you know, these people, I remember, so I have a friend who owned a bail bonds company. Mm-hmm. And when people would skip on their bond, all she would do is open up their Facebook page. Or better yet, their Instagram. They're
exactly where they are.
Yeah, they're streaming live right now. Let me pull up. She told me to pull up.
The IRS is doing the same thing. They follow the bail bonds and they're doing the same damn thing. See, that's why we don't be telling all our business. But you know, but number one. Number two, keep your business straight. Mm-hmm. So you ain't got to worry about it. Mm. Right? You know, because we talk about, you know, the change in our net worth, which has tax implications, but ours is tied up in real estate and we can write that stuff off and stuff like that. So, you know, and depreciate it until we sell it. So remember that, folks. Yeah. Remember that part. So yeah, I mean, we've had the same tax person since 2012. She's been doing our personal, our business taxes since 2012. And I got her from one of my good friends. She was doing their personal and business taxes for 5-7 years before that. So, you know, it's hard to change once you've got a rhythm with somebody. But if you guys don't have anyone, like, now is the time. Do not leave America talking about you just going to do easy tax or something like that, because there may be things that you don't realize, especially if you got more coming in than just Social Security. Mm-hmm. You know, you may be able to get away filing for yourself if you just have Social Security coming in or a pension coming in. Maybe. Yeah. See?
Yeah.
See, she's even saying maybe.
It depends. I'm pretty transparent with people that if you don't need me, like if you don't need me, I'm going to tell you, you don't need me. You can do this on your own. You don't need me, or you don't need anybody. If you've been filing, there's nothing substantial about your particular tax situation that you need someone like me. But what I love to see is when someone sends me a message and they're like, oh, my situation is easy. And then they start rattling off things. I'm like, that's not easy. First of all. Second of all,
that's complex.
If it was that easy, you wouldn't have had to go through how many other accountants to get to me.
Right.
Straightforward. No, it's not. It's not at all. And little things that a lot of people are doing that they don't realize. There's disclosure requirements that can cause penalties. So a lot of people are investing in foreign real estate, which is a great investment and very smart, especially considering what's going on in the global economy. However, as a U.S. person, it has to be disclosed a certain way. And it's not that you have to pay additional tax on it. You would pay tax on it because it's rental income like you would in the U.S. You would get deductions and depreciation and things like that. But it also then has to be disclosed separately because it's a foreign rental property. Failing to disclose that, $10,000 every single time. And then if they find out about it before you get to them, it's another $10,000 every month, at least for 5 months, up to $60,000.
Y'all hear that?
And again, this is not additional tax.
It's no joke.
Yeah.
So, okay. So let's get back to basics first. Let's explain the difference between filing versus owing.
Okay.
You know.
This happens a lot for people that work overseas, especially if you're making less than Rick mentioned, the foreign earned income exclusion, which is an amount that's adjusted annually for inflation. For 2026, I believe it's going to be 136,000 or so, and that's per person. So I think it's 136,500. So that's taxpayer and spouse can exclude that from their income. Meaning, basically, if you earn it overseas, it's gone. You're not going to pay tax on it. It doesn't matter if it's from your K1s. It doesn't matter if it's from K1s meaning earned income. Like if you are an S Corp member or something like that, it doesn't matter if it comes from a W-2. If you're working overseas and you get a foreign wage statement, it's gone, right? But you have to still file. So let's say I make $80,000 overseas. I live in a very low tax country. I'm using the foreign earned income exclusion to wipe out my income. I still have to file. I still have to file. I still have to disclose the income, show you that I'm taking advantage of the foreign earned income exclusion. So I still have a filing requirement every single year, even if I don't have a tax liability at the end of every year.
Filing requirement versus tax liability. Yes. Two different things. Because when I tell people, yeah, we file in the States every year, and then I take that tax return, give it to my person here to help them file our taxes here. And they're like, so you get double taxed?
Not really. No. Normally what happens if you do it right is the country where you pay the highest tax, that tends to be your total tax liability. So let's say you're in a country with like 55% tax, I'm thinking the UK, and your tax liability or effective tax rate in the US is 25%. In theory, you would pay 25% tax in the US and then take that 25% and credit it on your UK return. I mean, that's an oversimplification, but that's pretty much how it goes. You pay the higher of the two, right, but you wouldn't pay both together.
Exactly.
If you're doing it right.
Exactly. That part.
Yes.
That part. And so we have not, when we've paid taxes here, you guys, when we've paid taxes here, we've not had to pay taxes in the United States. And before we were tax residents here because we hadn't been here long enough, we didn't know because that was the year we retired. So we didn't know in the United States they owed us. But we still filed. That's the thing. That's the thing. We still file. So, because people get confused and they make assumptions, and that's where, people get into trouble.
I also want to mention sometimes, I'm sorry, Halisi.
Okay,
sometimes people will say, especially with green cards, well, I'll just get rid of my green card. I'll just surrender my green card. Well, one of the requirements to surrender your green card is you have to be in compliance for the last 5 years, meaning you have to have filed for the last 5 years. Or if there's three tests, one has to do with your tax liability, one has to do with your net worth, and then the third is, have you filed for the last 5 years? And if you say no to any one of those questions or you fail one of those tests, you still have to file U.S. tax returns for the next 10 years. So if your assets are over $2 million, if your income tax liability is over like $150,000 a year, or you haven't filed for the last 10 years, you can give up your green card, but you still have to file tax returns for the next 10 years. If you're a citizen, the same tests apply. So if you're out of compliance with tax returns, you can give your citizenship up. They're going to take it from you, but you still have to file tax returns for the next 10 years if you haven't been in compliance for at least the last 5.
Diabolical.
Yes.
Because y'all, do you know how many countries in the world tax your income no matter where you are?
There's 2 of them, isn't it?
It's 2
no,
or
I thought
3.
there were like 3 or 4.
It's not that many. It's like Russia for sure is one.
Okay.
Shocking. The U.S. and I want to say Mexico, but it's not that many.
I don't think it's Mexico.
Mexico does something because I've had clients.
They do with their citizens. Yeah.
There's something there. It may not be worldwide income all the time, but Mexico holds on to you. Russia for sure, and then the U.S. It's not a lot of us.
Well, I'm going to have to figure it out because we might be going for Mexican citizenship.
Yeah.
Because Portugal's tripping. And Teddy, I'm in another room because I can't prop my foot up in our. Teddy, all up in our business because I can't prop my foot up in our studio.
Y'all fighting?
Y'all all right? Yeah.
So I'm in our bedroom, and Rick is in the studio. Okay. So, so the foreign earned income tax exclusion, income exclusion that you were talking about, does that apply to Social Security and pensions?
No, it's earned income. So that is seen more like
Okay.
passive income. So you can't
Okay.
use it for deferred compensation is what that would be kind of seen as.
Okay. And so rental income then,
Unless
we,
you're a rental professional, that would also be considered passive income. So you wouldn't be able to write that off either. If you're like a real estate
okay.
professional, or if you
Right,
have a
right,
business that is just real estate, then yes.
right.
But if you just have
Just
rental
have a
income,
couple of
like,
houses.
yes, then no, that would not be considered earned income. Think about, like, I'm going to
I'm
work every
professional.
day.
I professionally make sure that the houses are taken care of.
What I mean.
Yes, I do know what you mean. I do know what you mean. Because it's funny because I learned because I have an S corp and I formed the S corp was a partner in an LLC, and the tax person was saying that tax attorney was saying that if the S corp owned real estate, then it couldn't be a partner with the LLC for whatever reason. I didn't even want to know. But that got me to thinking that there's obviously more to it than I know, and I'm going to leave that to the experts, because
Yes, I'll
sometimes
say,
just too much to be dangerous.
I will say be wary also. Be careful of doing your own research. I'll say that, and be wary of people that want to I call it like over entity you. Like, let's create this parent company for a sub company, or you need to. I tell people all the time, when they're just starting a business, the purpose of a single member LLC is just to provide a person with corporate coverage in the event of a lawsuit. That's it. That's the only thing you're doing. Who is suing you? You don't have any clients yet. Like, you just started the business yesterday and you're setting up all these entities. Why are you doing that? I mean, you can if you want to, but a lot of times those things come with additional filing requirements and disclosures. And if you don't do them properly, or if you create a C corp instead of a single member LLC, now you've got filing requirements that you've missed that you have to go back and unwind with the IRS, which I actually have one of those I have to do right now. Somebody thought they set up a single member LLC and it was actually a C corp, and now they've got all these unfiled 1120s that we have to go back and say, no, actually this was a single member LLC. Please stop getting your tax advice from
Right. Yeah. And this is a good conversation because a lot of people, the side hustle challenge is coming up. Yeah, we say side hustle, but it's a business. And so, to Katrina's point, this is a little off topic. Rick and I filed an addendum, I think I want to say a Schedule A or something like that, on our regular tax returns for a while when it was still kind of a hobby side hustle. But when it started to get serious and we started doing weddings where there was liability and stuff like that, and we were up in other people's spaces, we incorporated. Okay, y'all. So, and I was working for tax attorneys at the time, so I got advice before I decided which one. Thankfully, it helped me when I came over here because of the difference between earned income and passive income and how it's taxed, which is where we left off with passive income.
Yes.
So we were talking about rental income. Rental income, if you own a couple of houses, is still considered passive, right? Because it's just, okay, yeah. And I consider it passive too. And I didn't even think about the fact that, yeah, people do this as a business.
Yes.
And so because it's passive, then conceivably, I would be paying taxes on that rental income in the United States.
Yes.
And not here. Or whatever they tax. Let's just say they tax in rental income at 25% and the United States at 15%. Then I would get taxed here at 10% and the United States at 15%.
Correct. Yes.
See how they do? But at least here, I get some health care and stuff.
Yeah, that part.
Even though that public hospital, y'all. But private would not be as inexpensive as it is if the public did not prop up the whole health system. So the public hospitals here still invest more per person than the United States does. So even though I had a horrible ER experience, I've been told by some Portuguese that got up in my comments talking about, girl, that was not typical. And then some said, you went to the worst hospital in all of Lisbon. So, girl, I'll tell you about it another time. It was a nightmare. It was a nightmare. All right, let's get to some questions. All right. Thank you for doing all this. I appreciate you. Thank you, Bridget. Yes, look, this is what we do over here. All right. So if you're just now tuning in, we're talking about taxes. Put a Q in front of your question. Let's change the banner right quick. Put a Q in front of your question so that we can find it quickly and give you an opportunity to ask questions. Yeah, I was doing that as well. I don't know enough to know my blind spots. Yeah, that's a lot of us. Because look, thank God I had Katrina on our first year here. Yeah. I don't even know how many subscribers I had back in them days. Like, how many do we have, sweetheart? Maybe like 10,000 back in those days?
I think so, yeah.
Right? And you talked about the FBAR. We're going to get to that, y'all.
Yes, we will.
You talked about the FBAR, and I was like, oh, snap. Boom, did it. I did mine before April 15th. I try to do as soon as I get the first, what do we get? What are the things that we get from the companies and stuff? Not the K2s, but the 1099s and whatever that signals me. Oh yeah, it's that time again. Fill that FBAR out. So since I'm talking about it, why don't you explain the FBAR, what it is and what the responsibilities are?
Okay, this is,
and then we'll answer Shelby's question.
Yes, this gets more people in trouble than anything else. Very profitable for me, by the way. So like I'm good at helping clean this up. So the FBAR stands for it's the form FinCEN Form 114, Report of Foreign Bank and Financial Accounts. It's also known as an FBAR. Basically, it is a form that is required for you to disclose the maximum amount of each of your foreign bank and financial accounts, as long as the aggregate, meaning the total across all of your accounts, is $10,000 or more. That means if you move $5,000 from account 1 to account 2, the maximum value is $10,000, even though you're only reporting $5,000 of assets. This is not a tax calculation. This is a disclosure that is required by the FinCEN. FinCEN is the Financial Crimes Enforcement Network. It's a subsidiary of the Department of Treasury. It's like a sister to the Internal Revenue Service, okay? They only are responsible for financial crimes. So they think that this is a crime, the failure to disclose. I mentioned earlier about the FATCA regulations. The FATCA regulations tie into FBAR reporting because, as I mentioned, these foreign countries have an agreement with the IRS to disclosure transactions back to the IRS. This is the fastest way for them to see and make money off of you failing to disclose. Again, no tax, disclosure. If you don't disclose the form, there's no statute of limitations until you actually file. So it could be indefinite. It's adjusted for inflation. I think it's around $16,000 per filing. And again, this is on a $10,000 threshold. So back to my example, if you move $5,000 from account 1 to account 2 and you don't disclose it, that's a $16,000 plus penalty for every year that $5,000 that you moved wasn't disclosed. I also want to mention it's not just bank accounts. It could be investment accounts. It could be mutual funds. It could be foreign pensions. I have some clients that have pension accounts with the government that they work for in countries where they have no idea. They don't have an account number. They know the financial, like they know it's the Department of Labor has an account for them, but they don't know how much is in it and they can't access those funds ever, like until their retirement age. We still have to disclose that account on the FBAR, even though Alicia, you're on mute. So, right. Yeah, so you have to get those in there. It is a real quick and easy way for them to get to you. I also want to mention it comes with jail time. It is a felony. If they think you did a willful violation, meaning you did this on purpose, then and you have to prove that you didn't do it on purpose, okay? then it's a felony. So most of the time people are getting a year and a day. And when I say most of the time people, regular people are going to prison. A lot of them are older, like 75, 80 years old, going to federal prison for FBAR violations. Okay. It's very serious, and it's so easy. The form itself is name, address, account number.
I think it took me 5 minutes.
I mean, if that.
It took me longer to log in and to go find my password than it did to actually fill out the form.
Also, do you have signature authority on your parent's account? Like, do you have a parent that lives overseas, and you may have a bank account that's got $1,000 in it, but your mom has $10,000 in her bank account, in Sri Lanka. Guess what? You have to file and disclose those accounts, even though she's a non-citizen, non-resident. You have signature authority on those accounts. I see people get caught up in that too. So just be aware.
Yeah, and you guys, the first year that we were here, or maybe it was the second year, I wasn't sure if I ever had more than 10,000 or more in the bank. Mm-hmm. I filed it anyway.
Yes, please.
I filed it anyway. Now I know. Now I constantly do, because I don't want to deal with that devaluing dollar. So we transferred large chunks, and unfortunately have it sitting here without gaining interest. But at least it's not devaluing either. Yeah. Because let me tell you, when we moved here, we were on the plus side, and now we've lost anywhere from 12 to 15% of our wealth if we were to convert it totally to euros today. That's crazy, right? That's crazy. It's crazy. So you guys, and the first time Katrina came on, it wasn't 16,000 per indictment or per injury or whatever.
Yeah.
So what was it back in them days?
It was 16,000 per unreported account. Like, we got to win with 16,000 per year. It used to be 16,000 per unreported account per year. So if
you had 3 accounts
per unreported year.
Right. Because I remember you talking about some folks having hundreds of thousands of dollars that they owed.
Yes.
Because they didn't fill out a form that takes you 5 minutes and is not about taxes. It's just about making sure that you're not trying to launder money. That's what I think they do it for. I don't know. But anyway, fill the damn thing out.
I think that's part of it. It's also a quick and easy way to see if you're making money outside of the U.S. that you're not reporting on your tax return. Because if your foreign bank account goes from 100,000 to 200 million, and there's no corresponding $200 million jump on your return, then okay, well, now we can audit you, and now we can see where did this money come from. Because even if it's drug money, you still got to pay taxes on it. Like, they don't care how you got the money. They just want the tax.
If it's in a bank, it ain't under grandmama's mattress.
If you got 200 million in drug money and you put it in the bank, you might as well pay taxes on it. They can see it.
They can see it. All right, let's get to some audience questions here. So Stella says, if you live in Portugal part of the year, do I have to pay taxes in both countries? All right, so let's do a real scenario. Let's say Stella lives 6 months in Portugal and 6 months in the United States.
Mm-hmm. So US, yes, you're always going to have to pay as long as you're a citizen or a green card holder. For Portugal, I think the tax treaty says 183 days. Most tax treaties say 183 days, which is about 6 months. It makes you a tax resident. And then if you are a tax resident, then you're going to pay tax on, in most cases, your worldwide income. If not, you still may have to file as a non-resident if you're working in Portugal while you're living in Portugal. So yeah, potentially yes.
Yeah, but that doesn't still mean you would be double taxed.
No,
Stella. Okay, so it just means that the 6 months. Correct me, Katrina, if I'm wrong. Mm-hmm. The 6 months worth of money that you made while you were in Portugal, you pay taxes on that, and the 6 months of money you made while you was in the United States, you pay taxes on that in the United States.
Yeah, you would still pay tax on your worldwide income in the U.S., but you would get a foreign tax credit for what you already paid in Portugal. So yes, yeah. Mm-hmm. So it would, in essence,
that you're not.
Yeah. So you wouldn't be double taxed. Correct. Not on all of
Okay.
it. On that portion, maybe.
Right. I've yet to be double taxed.
Yeah. No.
That
only happens in countries where we don't have an income tax treaty or in
treaty.
other specific situations. Like there are some situations where you have to pay tax in both. I'm laughing at the question. Oh my goodness. So will my state, California specifically, as I start laughing, continue to consider me a resident for tax purposes? California.
Yes, they will, Karen Louise. Yes, ma'am.
Yes. California is nasty. New York, New Jersey, Pennsylvania, Ohio, Illinois, Michigan,
yes, ma'am.
Georgia. They are Alabama. I don't know if I said that. Very, very sticky. You are going to have to break your state tax residency, which looks like selling all property that you have, moving all of your bank accounts, all of your investment accounts, moving your physical address, I would prefer you go to a state that doesn't have an income tax. Some people don't like those states for political reasons, because a lot of the states that don't have income tax, you don't get to vote the way your vote might want to go. So, because the states that don't have income tax are like Florida, Texas, Tennessee.
Is Nevada no tax or low tax?
Nevada is no tax. They're no tax.
Nevada goes back and forth. So
yes. So a lot of people from California it is purple. A lot of people from California go to Nevada and establish residency before you leave. If you don't, a couple of things. California is very, very tricky to get out of. Also, California does not honor the foreign earned income exclusion, meaning that if you can take it at the federal level, you're not going to be able to take it on your California return. So your worldwide income would be subject to tax in California with I don't think they do the foreign tax credit either. So you would have any benefits you would get at the federal level, you're not going to get them in California. And it's like that for most of the states that I just mentioned.
Yeah. We've had to pay taxes in Colorado. Colorado has low taxes because it used to be a red state. So for now, we haven't bothered, and we still own our house. But we own our house in LA too. But see, we vote every year in Colorado. We haven't voted in California in decades. Yeah. So it's easy for us to own a house in LA and still say that we're not, residents of LA.
Correct. And I want to mention one more thing, Halisi, before we move off of this question. Be aware that some states have requirements that you have to establish residency in another state to break state residency. You can't just move out of the country, and California is one of those states. So if you're like, well, I'm just going to break residency and move to Portugal, that's not going to be enough for them. You have to establish residency in another state first. Some states are like that. They're called domicile states, where and please don't ask me which state is which. I actually have a book about this if you're interested. It needs to be updated for tax tables, but the information about whether or not it's a domicile state is correct. But off the top of my head, California, New York, New Jersey, Pennsylvania, Ohio, Illinois, Georgia, Alabama, those are some real nasty, tricky states.
Yeah. Yep. Yes. And yes. There was one other thing I was going to add to that. California, I can't remember. If it comes back to me, I will ask tax residency. Karen Louise, you don't want to be paying them California taxes. And again, when you're a Californian, you get so many benefits that you just think that's the way it is. So yes, it's crazy, but yes, you do get benefits. And it was very apparent when I had to move my dad with dementia back to California from Colorado. And all of a sudden, all of these benefits were open to him that were not available in Colorado with Medicare in Colorado. So yeah, once you leave and you ain't getting no benefits, you don't want to pay them taxes no more. That's for sure. That is for sure. I'm not sure, Bridget, why you said crack is whack, but the other country that taxes on worldwide income in the U.S. is Eritrea. Oh, really, Yakota? I knew it was someplace.
Yeah, that's what I was thinking, Eritrea. I just couldn't pronounce it.
Some people say Eritrea. I don't know which one is the correct way, to be perfectly honest, or maybe both. I don't know, y'all. I don't know. I know we have a ton of folks from there in Colorado.
Hmm.
Beautiful folks, beautiful, beautiful folks. In Uruguay, while we would be considered a tax resident if we chose to live there 6 months per year, they will give us 11-year tax holiday.
Mhm.
You didn't tell us that part, Yakota.
They're looking to get
See?
some of that expat money that like Costa Rica and Panama and Mexico is getting.
And
So they're
Portugal
in
was
Portugal.
getting because
Yeah.
Portugal had a 10-year tax holiday for
Yes, they did.
immigrants.
Mm-hmm.
When we came, it was 10%.
Mm-hmm.
So, and then a year or so after us,
Yeah.
they took the tax holiday away. Uruguay is looking better and better. We
Mhm.
need some more residencies, Katrina. Excuse me. So we have been Yakota and his
And
husband
Peter.
have hipped
Yeah.
us to Uruguay was already on our list, but
Mhm.
I did not realize that unless you're going for citizenship, that they did not have stipulations on how much you had to be in the country.
Oh, okay. Okay. Yeah, they're
If
they're
you're going
coming
for
up.
citizenship, right? If you're going for they are coming up. If you're going for citizenship, we talked about this last on Thursday, y'all. So I'm not going to explain it. It's different, but see. Oh, did we answer his question? No, he's going to be in Uruguay. Oh, he just said that he just wanted to let us know about the tax holiday. Yeah. Good afternoon from 85 degrees Brooklyn. 85 degrees. Oh yeah, it's summertime. That's right. I was about to say, isn't Brooklyn supposed to be cold? Thank you all for doing this. We saw this one. Oh, she doesn't know her blind spots. Okay. I'm sorry, y'all. We just moved to Cascais. My wife has her pension. I get 100% disabled vet. Any advice of what we need to do?
This one may not be one where you would have a filing requirement. I would have some to do some research. You may not have a filing requirement at all. You would just file your regular US return. But I would have to look into this. That's not an answer I can answer off the top of my head without looking to see what other benefits. But I would also just as a random just kind of ask these questions if you can before you move or right when you get there. But I like this is something where I'd have to pull some books out and look. I can't answer that off the top of my head. But this looks like something on the US side you might be able to continue to file as normal. But I would have to look and see what you would have to do locally.
And Benita and John, see, I know who these folks are. John's in Montana as himself. I thought I gave you guys my tax person here. Did I? If not, call me tomorrow, not tonight.
Yeah.
Because y'all, it's 9:20 at night here, y'all. All right. I'm still wondering who you know that damn uncle, he be drunk and high, coming talking all that yakety smackety at the cookout. I just don't know. I'm so tired of him, Katrina. Damn.
Look, he beats.
Would you recommend hiring or using an accountant with foreign tax experience when doing taxes as an expat or not?
Yes, I would.
Valerina.
100%. And
don't hesitate, Katrina.
Well, this is the thing. I don't have the code around me. The Internal Revenue Code is 3 phone books or 2 phone books. It's the size of, some of y'all are young, don't know what a phone book is. It's about this big, 2 of these. Then there are 6 books called the regulations that are also the size of a small phone book. And those 6 books interpret what's in those 2 books. Okay. That's the entire Internal Revenue Code. The foreign pieces are probably several hundred pages within those 2 phone books interpreted by 6 phone books. There's a lot of that I don't know because I don't need to know it because it doesn't apply to the type of work that I do. I don't need to know about the taxation of nonprofit accounting adjustment. Like I don't need that. That's not what I need. But what you do know is somebody who knows those couple hundred pages of international tax anything. So for example, something kind of small that can be very big if you invest in a foreign mutual fund, in the UK, they have things called, I think they're called ISAs, where all of the investment is tax free. You reinvest tax free. It's a great way for you to, kind of build your retirement funds. That's great in the UK. In the US, of course, it has to go on an ISA, but foreign mutual funds are also considered PFICs, passive foreign investment companies, which means there's separate disclosure required. There's separate basis and taxation calculations that are required. Failing to do that could be another $10,000 to $60,000 penalty. These are things that you're not going to know unless these are scenarios you see all the time. If you have to register your LLC in the foreign jurisdiction, now you may have what's known as a controlled foreign corporation. That has to be disclosed separately. If you open a foreign trust in case something happens to you and you want all your foreign rental property to go into a trust, then that has to be disclosed properly. Yes. So yes, you do want someone who knows these things, because again, I get a lot of business from people who've had accountants that are really good at what they do. They just don't know this piece. And then now we find out after the fact, and then somebody else has to come in and fix it. And it's not a cheap fix.
It's always easier to do it right the first time, and less expensive to do it right the first time and just hire somebody. Because like my mom, I told my mom over and over and over, and she just kept putting it off and kept putting it off. And then finally, this man had to do 10 years worth. And like, I just couldn't imagine going 10 years with that monkey on my back.
Yeah.
I just couldn't imagine.
They have a program now called streamlined filing, where if you're delinquent and you've lived overseas, then you can file the last 3 years and become current. If you're still living in the US, you can't do that, because they're like, you don't have an excuse. You can still use the streamlined filing to amend. Let's say you didn't do your FBARs and you've got foreign interest or dividends that you need to report. You can use the streamline to amend your returns if you've been living in the US, but not if you've never filed before.
So Rick and I just opened up we have a Schwab investment account and checking account. We just opened up a Schwab global account. Mm-hmm. We haven't done nothing with it yet because I don't have time to do my research. I just opened it. So now it's open and it's got some money in it, sitting there, not making no money. But my understanding is I have access to global investments that I would not have access to. So would that have a special filing, or because it's Schwab, they will send me what I need for the US?
Yes. So you don't have to worry about, so if you have a Schwab, like Schwab or Fidelity or Raymond James account that invests in global markets, you're going to get a 1099 for those. So you don't have to worry about disclosing those separately. That doesn't have to go on an FBAR. That doesn't have to be considered on an FBAR, because the IRS already gets what they need out of those accounts.
Okay. I like I said, I just got it. Money just sitting there, but it's hard for me to start action before I have all the answers. So the first action was, I know I need one of these accounts because my dollar is going down and I want to put some euros in there and it can hold multiple currencies. So that was my first thing. I knew also that it had access to, foreign investments that the regular doesn't. But because I didn't know about the tax implications and stuff like that, the money's just sitting there.
Yeah.
The money's just sitting there because it's hard for me to make a decision blind. I don't like paying for mistakes. If you are drawing down from your taxable account, like 401k, Roth IRA, was that be viewed as earned income? I thought earned income would apply if you're working or having your own business or have your own business.
That's not going to be earned income. That would be almost like deferred compensation. You earned it and then you're getting it later. So from a foreign earned income exclusion perspective, it would not qualify. Depending on where you're going to be living while you're drawing that down, you would have to look, if we have an income tax treaty, at what kind of benefits are available. Most treaties say the country where you earn the money is where you pay the tax on the money, meaning that it should be tax exempt in the country you're living in. Now, I do want to call out one thing because we talked about getting citizenship in multiple jurisdictions. So, if you get citizenship in a country where we have an income tax treaty, most income tax treaties have something in it called a savings clause. And what the savings clause does is it overrides the treaty for citizens and residents of the country, whatever country. So I can't use a U.S. income tax treaty on my U.S. return. If I go and move to Portugal, I can't use the U.S.-Portugal income tax treaty on my U.S. return, only on my Portuguese return. Now, if I become a citizen of Portugal, then I can't use the treaty on the Portuguese return either. So just be aware of that. If you're getting citizenship in countries where we have double tax income tax treaties, then you may lose some of those treaty benefits once you become a citizen.
Every single time I have her on here, because so now I'm going to ask, because I need something to make me feel better about the fact that Portugal changed, its rules, 5 years to citizenship to 10 years to citizenship. I am still pissed off because they changed the rules in the middle of the game and they didn't grandfather us in. Yeah. That's some baloney. That's some baloney. So I'm going to ask my tax person if indeed that's the case, so I can feel better about something.
Yeah, you should be.
I need to feel better about something about this citizenship thing.
Most South American countries don't have treaties anyway, so you don't have to worry about that. I mean, but that also means you're not going to get any benefit. You would just pay tax on everything unless they have a special expat regime like the gentleman mentioned Uruguay does.
Right. Oh, we got you, Tina. Let's as a matter of fact, can you put your information in the private chat and then I can pop it in the public chat?
I sure can.
Thank you, Katrina, for the sound information. Look, Katrina is the official OBU expat tax guru.
So yeah.
Okay. Don't get it twisted. You guys know we don't deal with no idiots. Come on now. So with the FBAR, if you have a foreign account of any kind, you have to make this file. Hey, Mark. No.
That's kind of broad. No. There's several that are excluded. Oh goodness. So for example, the biggest one is if it's already been reported. So let's say you have a foreign account that is for your employer. Let's say you're a controller and you have access to all signature authority over your entity's bank accounts, which, to be fair, if you have signature authority over corporate bank accounts and there's an FBAR with your name on it, and then you have like $100 in a foreign bank account, you have to file an FBAR to disclose that $100 because your total threshold would be over the $10,000, even though your personal threshold is under. But every account does not have to be disclosed. But if you have a specific question on what needs to be disclosed, just because some of them do, some of them don't. The IRS also has a form 8938, which requires disclosure, and some of those assets are different. So I would just.
And if I remember correctly, you have to have 10,000 in a foreign account or more. For 30 seconds for that's right.
Aggregate.
So it aggregate. So that means if you have 5,000 in the UK, 3,000 in Portugal, and 4,000 or whatever in France, because altogether that's 10,000 or more, even if it's only in there for 1 second. If I remember correctly,
that is correct.
You have to file the FBAR.
That is correct.
So I just file it anyway.
I would too.
And put the highest number I remember.
Or you can check a box that says amount unknown. Just check the box.
But I'm here. I got this money. I'm paying my bills. Y'all know that. They know. Yeah. They already know. They know.
Again, we told on ourselves.
Yeah, we were in the United Laos talking about we doing a live YouTube talking about we out, we
Right.
out, folks.
Oh my gosh.
This is where you
Anyway,
can find us.
yes.
We were
My
in the
new address.
JFK, we were in the JFK UK United Laos talking about peace out, bitches.
Right. We have
We
told
ain't dealing with this shit no more.
there. Yeah.
Oh my gosh. All right. Let me stop laughing because I'm going to make my mascara run. Okay, wait. Let me
Yeah.
see. Okay, so Rhonda says, of course, you'll never be able to prove that forgetting or not knowing was intentional or not.
It's
It
really hard.
depends. There's sometimes your actions will show whether it's intentional. You might have done actions to show that. Right?
That's
Like moving money and hiding money.
That's normally what happens is because a lot of times people blame their accountant. They'll say, oh, my accountant never told me. And so then the accountant is going to pull up a questionnaire that asks specifically, did you have money in a foreign bank or financial account? And either you left the question blank or you said no. And then the accountant's out of it. And now it looks like willful on you. So it's very unlikely that also Schedule B, which is where you report interest and dividends. So interest is part 1, dividends is part 2. Part 3 asks specifically, do you have money in a foreign bank or financial account? If you check no, and the answer is yes, that could be deemed a willful violation and you're not going to get out of it.
I don't speak Jamaican patois. Big brother be on the prowl, man.
Mm-hmm. Yeah.
Big brother be on the prowl. Okay. How will long-term capital gains be taxed? Will the country I move to, generally speaking, recognize the favorable U.S. long-term capital gains rates? Should I harvest gains before leaving the U.S.? Good question.
That is going to depend on the country that you're going to. First and foremost, how they tax capital gains, long-term or short-term. Most countries, the long-term capital gains are going to be better than short-term, but better is a relative term. If better is, 40% versus, 20% versus 40%, yeah, it's a relative term. I would say once you know where you're going, and this is kind of the advice that I give when I'm doing a consultation, because some people come and they're like, I'm moving to this country, or they'll say, I'm trying to decide between these 3 countries. Then we can kind of look at something specific like this and say, okay, well, if you decide to move to Italy, here's what you need to know for capital gains. If you decide to move to Portugal or Uruguay, here's what you need to know from a perspective of capital gains. And then that will let you know if you need to divest before leaving the United States. But keeping in mind, if you do that, then you've got kind of the lost earnings potential, because now you're taking money out of investment accounts and putting it in cash, and then the dollar is not doing so great. So it's going to be a pro and con, but you would have to, you need to know where you're going first, or have an idea of where you're going first to be able to answer that question.
And Karen Louise, and here's the other part that we have to remember when we're talking about like this money and harvesting the money and things like that. I think as long as it remains where it is, it's not going to be taxed. It's once you start taking it out. So the less you need to live on, we forget about that part. The less we need to live on. Now, Karen Louise she was part of that Black excellence crowd. She's taken her cape off. She has taken her cape off. But that does not mean her bank account don't look like Black excellence.
Amen.
Right? I'm not mad at her. But for a lot of us, what I find is once we are not around toxic capitalism, we don't need as much to live the queenly life we believe we deserve. I'll just leave it like that, right? And that looks different for everyone. But I'm pretty bougie, y'all. I am. Rick will tell you. Because, you know, even when we didn't have a lot, my mom was so OCD that our house was always so pristine, like it could be in a magazine.
Mm.
You know, maybe not decorated so nicely, but pristine. So I'm a little bougie, y'all. You know, champagne taste on a beer budget.
No, that's right.
All right, so very easy to file the form online, everyone. Oh, she's talking about the FBAR. It's free, not complicated, and you don't need to pay anyone to do it for you. No, you really don't.
That's true.
Make sure, because I almost got caught out there, you guys. There are companies out there that act like they will file it for you. Make sure you are on the .gov site, y'all. Because I almost got caught out there with a third party who was going to file it on my behalf for the low cost of about $200. I was like, wait a minute. This is not what I remember from last year.
Yeah.
Back out.
Yes. And make sure you're going to bsa.gov. So BSA, Bank Secrecy Act. Go to that site. It's not going to be on the IRS's website. You can probably find it from the IRS's website. But again, this is not the IRS. This is financial crimes. So you're going to BSA to file your FBAR.
Yes. This is financial crimes.
Everything in there. That's the thing that'll get you. Filing an FBAR and you missed something is just as bad as not filing at all.
So it will allow you to hit submit and with missing information?
Well, no, they don't know it's missing just yet. So let's say I forgot an account. Like I forgot an account.
I see what you're saying.
Realize. Yes.
Oh, I see what you're saying. I see what you're saying. That kind of missing information.
Correct.
If you sell your home in the U.S. while living abroad, are there any tax implications? Yes, Mr. Malone. Yes.
Highly recommend selling the house before, especially if it was your primary home, because then you're going to get that exclusion of, if you're, I'm assuming you're married, up to $500,000 on the gain. So yeah, you definitely want to sell that house.
You do not get that,
and you do not get that overseas. So sell it before you leave the U.S.
Sell it before you get that card, before you get that residency card.
Yeah.
Because that's when they say you're an official tax resident. Now they say as soon as you get here, but then they don't count it towards your citizenship. And the accountant said, no, let's use we use the residency card. So,
right.
So that house, that's the situation that Rick and I are in with our house, because we did not intend to sell it, but we didn't intend for the Mellon felon to get reelected either. We thought that the decline of the West would happen more slowly.
Nope.
But no, white supremacy had to rule.
Yes, it does.
Racism is expensive.
Right.
I'm telling you, I'm so tired of racism costing us all so much money. I moved to France from India. However, I have a virtual mailbox in another state. Am I still considered a tax resident of Indiana?
Indiana's nasty. If you have a car, if you're registered to vote, if you have bank accounts, if you have financial accounts, if you have any of those things in Indiana still, they're going to still consider you an Indiana tax resident. A lot of states are not considering virtual mailboxes as other residency locations. You can use them, but if you've divested from everything else and you're using a virtual mailbox out of state, you may be okay. But if you haven't divested from everything else, I normally recommend use a family member's address versus, unless you did move first, I would recommend using a family member's address first before a virtual mailbox. I mean, unless you're a non-citizen, non-resident of the U.S., and that's the only way you can get an address in the United States. Just because if you didn't divest from everything, then that virtual mailbox may not help you.
And did you register to vote in that place where you have the virtual mailbox?
Exactly. Because some of them are, I know there's one company that's out of New York. So if you're not registered to vote, if you're still registered to vote in Indiana, or you didn't change your voter's registration, because again, I believe Indiana is a domicile state as well. If you did not change your domicile, just means that you have the intent to return. Okay. So you're domiciled somewhere where you have the intent to return, even if you're gone for an extended period of time. So the U.S. is a domicile country, which is why they continue to tax you on your worldwide income, because they're saying as long as you hold on to your citizenship, you're planning to come back at some point in time. Your intent is a mental state.
I ain't.
but it's a mental state, and you can't prove someone's mental state. You know what I mean?
Exactly.
Or you can't prove that 10 years from now, we have to, they say everybody has to go back to their home country, and now you have to come back. We don't know that. So as long as you have your citizenship, they're going to treat you that way. Domicile states are the same way. Until you have shown that you've broken residency by moving to another state, then they're going to treat you as if you are still domiciled in that state.
Yeah. Again, I'm glad that we come from a state that is low tax. Of course, not no tax, but for now, it's low tax. Hey, Dennis, thank you, sweetheart. Go ahead, go ahead, sweetheart.
U.S. residents required to pay property taxes on a foreign property. Yes. So if they own the property, but if you are renting the property, you probably wouldn't pay taxes. Would you pay taxes in the U.S. on a foreign property? No, you would not. You would just pay taxes locally. And then if you own the property and you had a foreign mortgage, you could deduct your mortgage interest, but you can't deduct foreign property taxes unless it's a foreign rental.
Okay.
Hopefully that made sense.
So that was a good segue, because we forgot to mention every single donation, y'all, goes to our scholarship fund for Beyond the Bling. Beyond the Bling is our financial freedom program for late bloomers. So thank you, Dennis. If you need a scholarship, you know the deal. Just send us an email, put scholarship in the subject line, and you don't have to give us a sob story, sweethearts. We know you have integrity. If you ask for it, we know you need it. Also, Side Hustle Challenge cohort info session is coming up. That information is in the description below. And for those who are already in the Side Hustle Challenge cohorts or Beyond the Bling, Katrina is going to do a private Q&A for us next Saturday. So we get a double dip of Katrina, but only for the people who are in the Beyond the Bling cohort or one of the Side Hustle Challenge cohorts. You should have already received an email. Even the people who are going to be in the cohort in July get invited. Okay. So if you are planning to do the Side Hustle Challenge and you want more information, in a smaller setting that's not public, you want to ask your question and is not on the public internets, that is your opportunity. Okay. That is your opportunity. And she'll talk a little bit more about, the tax implications of small businesses and investments and stuff like that.
I don't know if we mentioned this one, but I'm going to put this up there and see. Did we hit on that?
No,
we didn't. I get this question a lot. So the answer,
I'm gonna read it out for the people who are listening only.
Thank you.
Do you have to declare monies you're holding? Because LinkedIn is listening, Substack's listening. Hey y'all, do you have to declare monies you're holding in your WISE account, USD and foreign, if it meets FBAR requirements, as in 10,000 or more?
So I've seen both sides of this. I've seen yes, I've seen no. I'm going to say yes, because I am horribly conservative. I would go, if the amount is in US dollars, you wouldn't have to declare it. If the amount is in a non-US currency, I would just go ahead and declare it, because because WISE typically is just to allow you to pay from US dollars into foreign currencies and allow you to do that more, in an easy way. However, if you're holding the money in your account, then so if you're using it just to make payments, then no. But if you're actually holding money in foreign currency, then yes, you should go ahead and disclose that. And I think that's where people get confused, because people will say, well, WISE doesn't have to be reported. No, using WISE doesn't have to be reported. But if you are holding foreign currency in your WISE account, you should report it on your FBAR, just to be conservative.
I'm going to put, they're asking again, how can we book a consultation? So I'm going to put her information in the chat again, y'all. Okay, give me 1 second. While I'm doing this, Rick, do you mind putting up another question and reading it?
Okay.
It's hard for me to talk and think at the same time.
Okay, let's see. So if our home sells after we've relocated, do we need to be concerned about capital gains?
Yes. In the foreign country, yes. In the US, you probably will get it excluded unless you have a very, very large gain on the home. But in the foreign country, it's very unlikely that you're going to get the sale of your home to be excluded. So yes, that's going to be something to deal with. And there's not going to be, so if you pay foreign tax on it, you're not going to be able to take a foreign tax credit on income that wasn't subject to tax in the US anyway. So whatever tax you pay on it is just the tax you pay on it. So that's possible. I also want to say, I know this is scary for a lot of people. It's okay. It's okay. It's not as bad as it seems. You just, sometimes you just need to talk to somebody, and that's okay. But a lot of people are they get scared about this stuff, and I don't want you to be scared about this stuff. A lot of times, most of the stuff that people freak out about, it's pretty I mean, at least it's common for me because I deal with it all the time. People who don't report accounts on their FBAR, or, oh my gosh, I haven't filed in the last 5 years because I've been living out of the country and I didn't know, or I tried to file and I saw somebody who tried to do their own foreign earned income exclusion and it went horribly. And then the IRS started chasing them because the way they reported it looked like they had income that they didn't have, and just, penny rich, pound foolish. So, it it's not that bad, but sometimes it's just a good idea to make sure you understand the full scope of what you're actually dealing with, and don't downplay it and say, oh, it's not that hard. I've done my taxes my whole time, this whole time. I mean, yeah, I can do an oil change, but why would I want to do that when there's someone that can do it better? And also that, can identify some other issues that I may not have been aware of. So, I cannot
do not be what, penny foolish, pound wise, and penny foolish, or penny foolish and pound wise, or whatever.
Yeah.
So hold on, sweetheart. Can you take that off for 1 sec?
Yeah.
John, we need more information, baby.
Mm-hmm.
We need more information, okay? Because it sounds like we coming in on the middle of a conversation. We weren't there for the first part of it. Okay. All right, sweetheart, put that back up.
Okay, this is overwhelming. Should we wait to leave the U.S. to learn these things, or just leave and learn along the way?
No to both of those. No, babies. Okay, look. Before we left, Rick and I consulted with a Portuguese tax person, and we talked to our tax person who had 30 years with the IRS and does expat. And she said, I got you, Halisi. This is what you can expect. This is how you should, the money thing, this is how it should go to lessen your tax liability. I will read up on Portugal, You can pack and consult with people at the same time, okay? And so, again, if you are already in the process and your visa has been approved, what you might be doing is changing the way you access your money. Maybe that's what you're doing, okay? Because it's too late. You've already made the decision. But if you're still in the decision mode, you don't wait. You just, you talk to Katrina, you've got your 2 countries, you've got your 3 countries, you take that into consideration. But just don't consider the tax liability. Okay. Also consider, what do you get for that? And you still live the way you want to and pay those taxes and live the life that you want to. Because just going for cheap doesn't mean it's going to be better, y'all. Okay. Again, the taxes here are typical Western European taxes here in Portugal. We are on a special tax rate for another 9 years or so, 8 years or so. But still, you get the benefits of what you are paying taxes for. For instance, I'm going to say this and let it go. We already talked about healthcare. Another thing that I was just thinking about is transportation. They have a very robust public transportation system here in Portugal, and especially Lisbon and the other major cities like Porto, Coimbra, etc. Okay. To get a card is so inexpensive. Everybody 22 and under and everybody 65 and older in Lisbon rides for free. That's where your tax dollars are going. So yeah, you're paying more taxes, but you ain't got to have a car, and you don't have to pay car insurance, and for the tag, and for the maintenance, and for the this, and for the that. Right? So I want you guys to think holistically, not just about the taxes when you're choosing a place. And if you live in Spain 5 months per year and 6 months in Uruguay, like your code and Peter R, but bought a property in Spain, what are the reporting and filing requirements? Texas or New Hampshire? I think that's for Texas or New Hampshire.
Texas or New Hampshire domicile.
You're definitely, yeah.
Texas.
You probably would have to pay tax, and you're definitely going to pay tax in the U.S. I'd have to look at. We don't have an income tax treaty with Uruguay. Also, are you working? We probably need to have a consultation. Are you working? Do you have what kind of income do you have coming in, if any? I would need to talk more specifically with you about that, but we don't have an income tax treaty with Uruguay at all. So whatever income you're earning while you're living there for those 6 months would likely be subject to taxation.
And what about the property that they own in Spain, that they will be owning in Spain? I think they're just thinking about the property.
Yeah, if you bought a property just to own a property, then there's no tax implication for that specifically. Just owning a property in another country does not in and of itself create a tax liability.
Yeah, especially because I think they're going to get residency in Spain, and they have residency in Uruguay.
Okay.
So, and so they're going to split their time that way. Yeah. And that way they're working towards citizenship in both places.
Right.
I don't know what the Spain requirement is.
If you're a resident,
yeah,
it's probably
he's going to be they're legal residents in Uruguay. And then they're working on, I'm telling all your business. And then they're working on residency in Spain. See, this is how it is when you're part of the community, you guys, right? You want, just like Rashida was saying earlier, you want to know how to deal with all the nonsense that's going on in the United States. And so that this tax stuff is not overwhelming, be in community. When you're in the utopian community, you get access to this information for free, right? Y'all watching right now for free. You know, all this information. Come on now. So they're trying to get residency in Spain, long-term residency in Spain, probably on a passive income visa.
If you're a resident, you're going to be paying tax like any other resident, which is likely worldwide income. So if you're living in Spain as a resident, if you've got residency in Uruguay and you're a citizen, then you've got 3 different levels of tax. You may be able to foreign tax credit your way out of Spain and the US, but again, we don't have an income tax treaty with Uruguay at all. But South American countries tend to have lower income tax. But your situation is going to get pretty complicated because you're dealing with 3 different jurisdictions, two of whom have an agreement, but neither has an agreement with the third. So that's going to get complicated. Then you move on into Texas. Texas has no income tax, so Texas is not going to tax you. New Hampshire will likely continue to tax you as long as you are still a resident and haven't moved everything out of New Hampshire into Texas.
I would definitely be picking Texas over New Hampshire.
Hold on.
That's for sure.
New Hampshire have income tax.
And while she's looking that up, I'm going to hide that. And Greta, we need more information. What about New York? Are you asking about the tax situation in New York, which we know is high? Are you asking if it's a domicile state, which I believe she said it is? Are you asking what does it take to get out? What you asking, baby? What you asking?
New Hampshire does not have an income tax. It's like 7 or 8. So New Hampshire does not have an income tax.
Okay.
Either.
See, so surprise, that a New England is New Hampshire considered New England?
I think so, yeah. It's up there.
Not all them states. right? It's up that way somewhere, right? I know,
Yeah.
right next to Vermont. I know my education.
I know it's over
Okay.
there.
Are you
Right next
saying are you saying that I need to fill out the FBAR form before I get residency? Maybe.
Yeah.
Maybe if you've got Wanda, if you have a, like, for instance, we had a Portuguese bank account while we were still in America.
That's
We
correct.
had it for, for the whole year, and we were
Mhm.
still in America and had $10,000 in it for even a second,
Mhm.
because that would have been our only foreign bank account. Then yes, we would have had to file the FR, because it's not about where you live, it's about where your money lives.
That's
Where your
correct.
money at, girl?
Yeah.
Don't be
You could
hiding
never
it.
leave. You could never leave the U.S. and have an FBAR filing requirement. So yes.
Yes. Does the FR apply to WISE accounts? We talked about that.
Mm-hmm.
If you move to Florida, you have to stay there for, I believe, 6 months to be considered a tax
6
resident and
months.
break away from your
Mhm.
original state domicile.
It's because so many people move to Florida.
Okay, well, check out New Hampshire. You're right up there in that cold ass upper state New York, Greta. I'm telling everybody business. So check out New Hampshire since it's tax free. I didn't know it was tax free. Bernie Sanders.
Yeah, right.
You guys pay for all that stuff. I read somewhere
I would have
that
to
in
look.
Portugal you only pay tax on your home if it's over 500,000. That wait, that you only pay tax on your which home, Jackie? We don't have all of the information.
Right.
So okay, yeah, we don't have all of the information, because I'm not sure if you're talking about what our Rich Journey was talking about or what. But yeah, more information, please.
Right. And that sounds very similar to like an exclusion, but then it's like, so as citizens, we are able to exclude the sale of our home up to $500,000 if you're married, 250,000 if you're not. It doesn't matter where that primary home is. It can apply to a foreign home if it's your primary home. So you can have a home in Portugal as your primary home, and you sell it. If the gain is less than $500,000, if you're married, it's going to be excludable the same way. How is that gain going to be taxed in Portugal? I would have to look that up. I'm not going to.
One thing that I do know, unless it's changed, because things change every day, is that I think for the part that's not tax deductible, you have to reinvest it within 6 months into your new home. I think in the United States, it seems like that's what it was back in the day.
You don't have to. You can. You don't have to get the exclusion. Oh, you're saying. Oh, you're talking about a 131 exchange, I think. So if it goes
over and above.
Yeah. So if I make $1 million on a house and then I take that overage and reinvest it within 60 days, then I don't have to pay tax on that at all. You can do that for any property as long as it's in the United States. So if you have a rental,
so it's not just for your primary home.
No.
Okay.
So if I'm selling my rental property and I don't want to pay tax on the gain, I have to get into another rental property in 60 days.
Okay. I think it's 6 months for your primary. And here in Portugal, I believe it's 2 years, y'all.
Mm-hmm.
And yeah, I believe it's 2 years. So at least it was 7 months ago.
Right.
Or 7 months ago, it was 5 years of citizenship too.
Things change every day.
Basic question: to open the kind of Charles Schwab account that lets me send money without fees, do I need a bank account with another bank? Part 2, what is the minimum amount of money I need? I don't know, Shantae, of any Charles Schwab account that allows you to send money without fees. Do you?
I don't, but that's a question for a financial advisor that can help you move your money around internationally if you're looking for ways to do that without fees. So I'm sure
I can tell you, Shantae, because I move money through Charles Schwab. And it's not that it's without fees, it's that it is a flat fee, as opposed to WISE, which works more like Western Union. So the more money you send, the more you're going to spend to send that money. Whereas Charles Schwab, whether I transfer 500, 5,000, or 500,000 over here, it's still going to be that flat fee of like 15 or 20 bucks. I can't remember.
Mm-hmm.
And so that's why I transfer big chunks for us at a time, like quarterly, maybe even every half a year, so that I'm paying less fees.
Right.
So if you can afford to do that, and equally as important, you don't feel the fluctuation of the currency exchange.
Mm-hmm.
Right. So I don't feel that my rent has gone, from 1,400 to 1,600, then back to 1,300. And like some folks in Mexico who transfer money every month.
Yeah.
It's so these are pro tips, you guys,
Mm-hmm.
to avoid paying, exorbitant fees to access your money. But free, that I don't know about. Did you say you should sell your home before getting permanent residency outside of the U.S.? It depends, Valerina.
Mm-hmm.
Does that matter which country you get residency in? Yes.
Mm-hmm.
Yes. Because whether it has a tax treaty or doesn't have a tax treaty, how does it treat property here versus America? Da, 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 da. Okay, so there's no blanket answer for that.
Yeah, I always say start by having an idea of where you want to go, and then we can look into that stuff specifically to make sure that you're getting the correct answer based on where you're even thinking about moving to.
Exactly. Yeah, because let's just take Yakota's. Let's just take Yakota's example. They're having residency in Spain, tax treaty, and Uruguay, which as of today, and with the Mellon in charge, ain't never gonna get a tax treaty as long as he's in charge, because it's probably an S-hole country according to him. Although they probably have free university and healthcare. That's a different story for a different day. So, the situation that they would find themselves in with their tax implications in Uruguay is going to be very different than Western Europe, right? And so that's why we can't make blanket statements.
Mm-hmm.
Okay, Tina is moving to Panama in August. Congratulations, Tina. We're happy for you. Do I need to file Panama taxes too?
Most likely, it's just going to be when and what you would have to report. So if you're moving, you're going to become a tax resident at some point. So most likely, yes, you're going to have to. We do not have an income tax treaty with Panama. So you're going to have, any income that you're earning, whether it be through working or if you are getting retirement distributions, then it's very likely you will have to pay tax on them. It's just when are you going to be subject to tax in Panama would be the question.
Right. Yeah. So the question is, when are you officially a tax resident?
Correct.
In Panama.
Correct.
And because what is true in Portugal is not necessarily true in Colombia, is not necessarily true in South Africa, y'all. Okay, every country's different, and it's real easy as adults to make assumptions about things because we know some stuff, right? And then we go to another country. Okay, so I'm come over here. I'm gonna buy my house, and I'm gonna do this and do that. And if I don't like it, doesn't matter. I can just flip it. And then no, babies. No. Okay. Yeah. Things outside of the United States work very, very differently. Just like things state to state sometimes work differently.
Yes.
Right? You apply for different benefits and this and that, state to state work differently. I just signed on. Hey there, we missed you. Did you talk about those living on a government pension or Social Security yet? We have. So, but I don't know what your question is, Esan. One, you're gonna have to ask a question because what they ask may not, even if you watch the replay, may not be. Okay. So it is in the chat a few times how to book a call, and I will make sure that it is in the description as well. Okay. Did we get through all of the questions? Rick, I'm gonna let you go ahead.
Hold on a second. Let me see.
I'm going to make sure that
I don't know if we answered this one. Why are countries like Spain concerned with my assets here in the US? I have rental property and primary residence, and sounds like Spain would tax me whether I sell the properties or keep them.
So that's an interesting, that's a good question. So some countries have what's known as a wealth tax. I think that's what you're referring to. And so they will tax you. So if you just own property in the US, there's other than the actual rental, the real estate taxes that you would pay on the property itself, you don't have to worry about owning property. You can own 15 different properties. You're going to be limited as far as the deductions you can take related to those properties as far as mortgage interest and things like that. But that's it. Some countries have a wealth tax and they look at your accumulated assets and then they tax you based on that. That's something I think they're starting to do in New York. I think I saw something about that where people that have properties in New York over X million dollars, but don't live in New York as their primary residence, have to pay an additional X amount of tax on that. It's the same type of thing. It's you're taxing the wealthy. So depending on the value of those properties, Spain may consider that as part of your wealth tax and may tax you just for owning those properties based on the value of those properties. That's probably what you're looking at. And again, that money goes to fund so on and so forth, those things, all those benefits. Yeah.
Right.
Yeah.
Okay. I see Tamara's question, but I'm going to ask a question right quick. Because I know a lot of people are in our audience are either doing some kind of side hustle, thinking about it, or, in the process of starting it. So let's just use Our Black Utopia as an example. Let's just say a typical service type business that is 100% virtual. It's a coaching business. Let's just say your coaching business, and they've got an online presence that they earn a few bucks from. What should they be keeping in mind as a small business owner? What are the questions that they should be asking their tax professional and themselves? Yeah.
Owning a foreign service business. So first and foremost, what type of entity?
Let's just say they start the business in the United States and intend to keep it as a United States business. Like I tell people, like they say, why didn't you move Our Black Utopia to Portugal? Because Portugal only gave me temporary residency.
Mm-hmm.
They only get for 2 years. By the time I blink, it'll be time to go back home. I ain't moving everything over here just to move it back.
Right. I would say the first thing is looking at the kind of corporate structure that you have. If it's a single member LLC, when I think of businesses, I think of filing complexities. So if you have a single member LLC, which is, if it's just you and you move overseas, then your business is going to operate pretty much the same way. All of your income would be eligible for the foreign earned income exclusion, providing that you're not doing any of the service in the U.S., because your income is earned based on where you physically are located, not where you're being paid. So if you
not where your customers are,
or not where your customers are, it's where you are physically doing the work. So if 100% of your customers are in the United States and you are performing 100% of the service overseas, then that is all foreign earned income. Even if you are, let's say you're a digital nomad and you're on a W-2, then your income is foreign, even though it's reported on a W-2. So you would still be eligible for the foreign earned income exclusion. I would say keep that in mind. I would say if you are a U.S. person that has a foreign business, or you're operating, because you technically are operating a foreign business, it is seen as a foreign branch of a U.S. business, and separate disclosure is required for that. Outside of, not additional tax, again, additional disclosure, same thing, $10,000 penalty goes up to $60,000 penalty. If you have a standalone business, a C corporation, so a company that lives and dies on its own. An example is Coca-Cola. Coca-Cola is its own separate legal person, and it lives and dies on its own, independent of its shareholders. If you have a C corporation and you are overseas and you want to continue to manage that C corporation, you may have to register it locally which could then come with other complexities, not just filing complexities, but tax complexities and things like that. If you're paying yourself out of that C corporation, then you may have to put yourself on domestic payroll. You may have to, I know, for example, in Australia, they have a government mandated pension, Australian superannuation. You have to put money into the super. If you're paying yourself any fringe benefits, those have to go through there. I've had clients pull people out specifically of Australia because of all the filing requirements, the registration requirements, the taxes that they as the company owe. If you are going overseas and let's say you're somebody who works from home and you take your laptop, you go overseas to work and you're going to run your side hustle overseas, please make sure you clear that with your company first, because there's something called permanent establishment that can happen. I've seen this happen more than once. So you pick your laptop up and you go overseas to a country where you don't have a presence, your company doesn't have a presence. Again, we're telling on each other, you on Instagram, you got your toes out and your laptop and it's beach life, # working from home. That company can get hit with basically them saying, okay, well now you have a presence. Well, now you have a presence in this country and we are going to tax you globally based on what you have one person out here doing. And I've seen that happen before. I had one client, this was a long time ago. He went to the UK to negotiate the sale of a business. Yeah, this is to negotiate the sale of a business, not his business, a company he worked for. He went to the UK as an agent of his company to negotiate the sale of a business. Negotiates the sale. The sale is in the newspaper. Oh my gosh, this big deal between this company and this company, blah, 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 blah. The sale is blah, blah, blah. He goes back to the US, goes on about his life. About five years later, maybe, the UK says, hey, we know you were here and we know you made a lot of money off of that sale because you were here as the agent and you owe us 800,000 pounds. We calculated based on what the sale price was and what your cut was, that this is your tax liability, and he had to pay it. And we were able to go back and amend those returns to get some foreign tax credit off of that. But he had divorced his first wife and married his second wife, and we had to get authorization from the first wife to adjust the returns. I mean, it was a mess. It was a mess. But they got him from reading newspaper articles, and they used those newspaper articles to go to immigration, track his entrance and exit from the UK, and then they just did their little calculation and they said, this is what you owe. And because he didn't have anything,
give me my money.
And because he didn't have anything there to protect him and say, no, that's not what happened, they had to pay it.
I'm surprised the company didn't pay it for him.
They did.
Oh, was he a 1099 or was he a W-2?
He was a W-2, but the company he worked for no longer existed. So he had to go to the new company to get relief. Eventually, that's what happened. They paid it for him, and then we did the foreign tax credit, and then they took care. That was what happened eventually. But him, not the company, got the notice from Inland Revenue.
You see, guys, this is no joke.
Yeah. If the company would have said, I don't know what you're talking about, that company, you don't work for us, you never worked for us. They could have done that. And then he would have been stuck with an 800,000 pound bill. Yeah.
It is no joke. Okay. My husband bought our primary home prior to us being married, so it's only in his name. Do we still get the capital gains exemption up to 500,000?
Yes, you would. Because you're married.
Because you file taxes jointly.
Yes, and because if it was your primary home, this is how I interpret the rules, and I have not been challenged on this. So the rules say it has to be your primary home for 2-3 years out of 5. So if it was his primary home before you got married, and then you all's primary home up until you sold it, then to me that would be sufficient. I've not had the IRS challenge me on that. I'm not going to do it. But as long as it was their primary home, but their primary home and your primary home up until when you sold the house, then I would say yes. Even if it was only your primary home for a couple of months. But if it was his primary home and then you moved or you moved into another home, and that gets a little tricky.
We're going to wrap it up because we're going on an hour and 45 minutes, y'all. And we don't want her to
Talking
get
about
hoarse.
taxes.
So, and we could keep going. We could keep going. And we're going to keep going, but we're going to keep going with the Beyond the Bling and the Side Hustle Challenge cohorts.
Yes.
So if you are already and that's how you get in touch with Katrina, okay? And we will put it in the description below as well, okay? So I will make sure, Katrina, that I grab that before we leave the studio.
Yes.
But so we'll put in the description for all the people watching from the future. Wait, let me get off air so I can copy and paste it and do all of the things, okay? But Beyond the Bling, the new version is coming out August 1st. The new community, the Financial Freedom Lab. So we're Fire Over 50 is going to be the Financial Freedom Lab for the Fire Over 50 crowd. And that is start the private community August 1st, because we don't want meta all up in our business. Black folks need to be having Black folks conversations privately so we can talk about how Black folks are going to survive the fall of this empire. And like Rashida said, the first way is to be in community. And this is one way. Today we came into community and you got all of this powerful information, right? This is information that them other folks who are fleeing, who helped create this situation, they're not getting this information. And you know how I know? Because I hear them. I hear them at the little meetups that include everybody. And they're like, how do you guys all know each other? I said, because we all in the same clique, y'all. We got one big clique. It's called the Black clique. Right. And maybe you can get invited to the cookout, right? And you get this good information. All right? So if you need help with your taxes, or you need a consultation to help you decide which country, Katrina has got you, right? We'll put the information up again right quick. It's also in the chat and it will be in the description below. If your issue is not making money, but managing money, you make money, but it just doesn't seem to stay in your hands, or you don't know how to invest, then Beyond the Bling, our financial freedom program for late bloomers, is what you need. If we Black, they never pay us enough unless we're working for ourselves. Let's just be honest. We know that. We never get paid our wealth. Come on now. All of us should be millionaires, because I know there is so much intelligence in this audience and on this screen. We should all be cajillionaires. Stupid Elon Musk and stuff buying his way. Don't get me started. But if you want to figure out how to bring in extra income streams so that you can make money while you sleep, so that you can make money without borders, our next side hustle cohort starts the second week in July. Okay. And then you will need to talk to Katrina again to figure out what you're going to do with all of the money that you're going to make, so that Uncle Sammy and Uncle João, Tia João, or Tio Jose don't get it. No, but look, everything that we do here is proper and in order and legal. But you are only required to pay the taxes that you are required to pay. You are not required to pay taxes you're not required to pay. And so there's no reason to do that. And you do that by making mistakes and thinking you're going to do stuff on your own. So first you get in the Side Hustle Challenge, and then you talk to Katrina. If you want more information on the Side Hustle Challenge, we're having an info session, a Zoom info session on the 20th. That information too is in the description below. And so all of y'all, some of you don't say goodbye to Katrina, say, see you next week, Katrina. All right. For all of you privileged people, just tell Katrina, see you next week. All right. And then we will see you all on Thursday. The meetup will be happening, y'all. The meetup will be happening. So we'll be going live from the meetup both Thursday and Sunday. Right? So it's going to be some spontaneous craziness. Is there a question that needs to go up, Ricky?
No, I was going to say, don't forget, visit the merch store. There's merchandise in that store.
Show me your hat.
If you see something that You might like it's not in there. Let us know and we'll get it done for you. So, but it's there.
Right. That's right. That's right. That's right. All right, y'all. So with that, we love you guys. You know, we love you. Hit that thumbs up. Make sure that the algorithm knows that you love us. Share this with all the folks that you know who are considering a move abroad. Share this with the folks who are already moving abroad because they may not know this. We haven't had Katrina on in too long. So we've got to have you on more often because
Oh, yeah.
literally, I think it was 2023.
Yeah, it was a long time ago. It was a while
Right,
ago.
we are halfway through 2026, and even though you spoke at the Move Abroad, Move to Portugal Summit, right? Did you speak at one of our summits?
Yeah,
Yeah,
no, not yours. No, I was in
but
Portugal.
you
No,
spoke at
because
the
we were
very
gonna
first
go.
one.
No, because I was in the South that time because I was there. I was in
Okay,
Faro. Mm-hmm.
okay,
Yeah.
sure.
Mm-hmm.
Okay,
I'm sure.
okay, okay. All right. Well, you know, we are going to have some more salons. So, you know, Katrina is part of the family, y'all. So don't think that we will not have her back.
Yeah.
But this will be one of the things that, you know, some of it will be behind the paywall because we've got to make sure that folks get the perks. But if you're willing to sit here for an hour and 50 minutes, you get all the things. You get all the things. We love you guys.
Oh,
Share
yeah.
this,
We
and
love
we will
you.
see you on Thursday.
Not a dream,
Oh, go ahead.
not a dream, a destination. Our black utopia.